Couple of ground rules. And again, my name is Stephen Vetterell. I'm the managing partner of FXES Trader. I'm also the owner and founder of our sister firm, Benchmark Wealth Advisors. It's a fee-only RIA. Couple of ground rules. I often get a lot of questions during these types of webinars because some of the content gets pretty hardcore. I'm actually going to skip past a lot of the generalities that I've done in many previous webinars in regards to order flow. We'll cover the basics, but I really want to dive into today and actually show you what took place today because there's some excellent teaching examples. I did a similar type of webinar to this, but I included market profile back in January of this year, which I think is just a really important concept for traders to understand and grasp, to be able to frame the market and what's going on as far as the auction process. And also, I think it's important to put together a chunk of context to see what's going on. I'll be able to utilize that, just poking back and forth between the two and some of the software that I'm going to show you. So I'll go through all of this soup to nuts. I would encourage you, if you have any questions, feel free to type them in the box. If it's something live, real time, maybe I can pause and try and answer the question. Otherwise, if it's just general enough, hold it off to the last. If you guys could, please. Yeah, let me slide the mic over. This is, how's that sounding now? Better? Okay, cool. I have a very loud voice, so I have a tendency to put the microphone pretty far back, but let me know if it's getting too soft. What we're going to do is I'm going to go through about 6 or 7 slides and give you some examples, talk about why I think this is one of the most important things from a micro level as far as executing, timing an actual entry, buy or sell. I think this is one of the most important things. I like to call it my fine tuner. But if you guys haven't really know much about myself, Josh touched upon it a little bit here. I'm going to drag the website into view here. So this is the home page. If you want, you can scroll down to the bottom and just see a little more about what we do. This is a disclaimer. Go through this just real quick. So the risk of loss trading commodities and futures can be substantial. Trust me, I know this firsthand. I've seen a lot of students come to us that have blown out accounts. You really should, carefully consider whether such trading is suitable for you in light of your financial condition. Risk management is the top of the heap as far as the concerns I have for new students and understanding that. So just know the things, especially the last 3 days, could be quite volatile. And you want to be clear that, you're not trading with your mortgage money or your rent money that you're using to pay next month's bills. So if you guys don't really know much about what I do, I have a pretty large following on social media. This is Twitter. I try and post stuff on Twitter that's not real chit-chatty, but it's really important to what's going on today, important news stories, so forth. If you want, I would highly encourage you to go into, you can take a look at my bio on LinkedIn as well. But this is the important part, in my opinion, and I've been often asked, why do I do this? Well, it's really twofold. I was very lucky in the early days of 2000 to 2005 to have some just phenomenal mentors that were willing to help me in my 2 previous occupations. And I think really it's just a pay it forward type of thing, mostly because also I've just come across entirely too much crap in the trading education community out there, just trying to sell courses and stuff, and there's no real merit to who they are. So I always encourage everybody, including my clients, to vet us out. Google me. Take a look at all the stuff on YouTube out there that I've put out. I've put out a tremendous amount of videos on this. Some of them have over 10,000 views on them. So you really, and they're all the variations of the subject of using the footprint, why it's very powerful, and using market profile, and obviously So let me just jump back in here. We'll go to what I hope to accomplish today. Little overview. So we'll go through the footprint chart, define order flow tools, what they're important and how it tracks order flow. Really the key thing in my opinion. Why I know all this is really because, and we'll incorporate the volume and balance algo indicator. It can give you an edge as far as a trader. I don't think it's difficult to memorize or at least be moderately familiar with technical analysis in the sense of looking at sort of broad chart patterns, understanding support and resistance levels, going through all the different types of analysis, whether it be Fibonacci, Gann, the different types of wave counts in Elliott. Those, in my opinion, they really are the big or the macro, along with market profile type analysis indicators and analysis for charts. But the problem is at the end of the day, it really is, in my opinion, order flow that is going to really be able to sort of put in the microscope, if you will, and focus down in on the markets. So we'll go through on today's trading action in the ES with the software. We'll go through some of the examples. I always like to do live at the end of the day stuff so you can sort of see how this all gets put into a practical implementation using the software. But really the goal while we're going through all this, please keep in the back of your mind that order flow tools will be used to determine whether trading activity is drying up, being facilitated, or increasing in pace at one form of price extreme or another. Okay. And then I have a little surprise I didn't let Josh know about, but I have a bonus PDF. We actually have a full trade plan and trading journal, as well as market prep analysis process that we go through every day and that we teach to our students as well. So everybody sticks around towards the end. I'll give you my email address. You can shoot me an email if you wish to get the trade plan. We can take it from there. All right, so let's get into this. Order flow. So you're not going to read all these paragraphs to you guys, but really the key thing with order flow is that you want to know where the aggressive trade is taking place. You want to know who the players are, and you want to be able to hopefully be able to identify, are the players big players, what they call other time frame players. If you guys are market profile, Jim Dalton, Peter Stettlemeier type of, if you guys use these kinds of tools, that is what's most important, in my opinion, is to determine who's active, if any, in the market. Now, most of this summer, at least up until the last 3 days, it's been a real snooze fest. And, that's common. Everybody that is anybody in trading is, on their yacht or in their house in the Hamptons or something like that, or they're just on vacation. But the market was quite dead. I mean, other than the Brexit craziness, pretty dead the whole summer. And, there really wasn't a lot to glean as far as just a lot of intraday order flow. And when I show you this footprint chart, which allows us to look inside the bar and see what's executed, both bid and ask, keep that in mind. I mean, you really don't need to, when you're learning order flow, it's not important to look at every single number. You can't analyze them all. You have to just be able to pick a couple of things from a particular bar or group of bars that you're looking at. But one thing that is important with this type of order flow analysis is that it diverges radically from traditional price patterns. Okay, so we're not trying to show any sort of bell ringing at the top or the bottom, but what we want to accomplish with this is incorporate all of these types of tools as far as technical analysis. But my final decision as to whether to execute a long or a short trade is based solely on the footprint. Now, obviously, there's a lot of other things as far as confluence that come together and high and low volume while and take an execution one way or the other is the order flow. So I'll go through all that. Next slide is the benefits. So you may have seen some of this before, but it tracks order flow. Okay, the being able to execute with greater precision, I think, goes without saying. So your timing entries and exits. Obviously, it gives you confidence. It helps you filter the noise, which I think is important, and it leads to improved transparency via that, especially the volume imbalance indicator that I'm going to show you as well. So the footprint chart contains, all price and volume data and logically organizes the trading data so traders can see inside the chart, which allows them to uncover price and volume patterns, okay, see the buy and sell and how they're impacting price, and looking for a tendency that the market can move in a particular direction. So having an intra-bar view of price and volume, in my opinion, and at the most micro level, is critically important to gaining just that slight edge. Remember, this business is all about probabilities. That slight edge that's going to give you maybe an understanding of, wow, there's, like today is a great example. I have a lot of other time frame players coming in the market today, right? Had some pretty powerfully strong Fed data from Philly this morning, which probably surprised a lot of people, including yours truly. And then we had an open test drive right off the bat, and pullbacks were very short. And it was really definitely not a day, especially in the order flow, not a day to step in front of the freight train until almost the end of the day. So order flow is the actual trades that are completed. Okay, what I like to call the aggressive trade. So the components of order flow include number of contracts traded, whether we're executed at the bid or the ask, relationship between the number of contracts traded at the bid and those traded at the ask, and then the net delta. Okay, so and I'll show this to you to make more clarity when I pop into the software. But we're looking really for the trend of the net delta. Are we increasing or decreasing? Again, are we facilitating price one way or the other? And it also obviously gives you the trend of price and the volume of that price. So the volume imbalance I get asked about the most because it's one of the indicators that sort of helps you cut through all the minutiae that's on the footprint chart. So let's talk a little about that. So in 11.2.4 and higher of Market Delta software, they brought in an indicator called volume imbalance. And it uses a familiar but different type of methodology for coloring values, both red and green, to spot important areas where there may be a change or a takeover of one side or the other. So the volume imbalance uses a variation and compares the bid traded volume of one price to the ask traded volume of the price located directly above it. So please make this distinction, just as you see below here in this graphic. You're comparing the 398 to the 251. Let me. I've boosted the mic I can the best here and see what you guys are saying. So I have a tendency to talk kind of fast with this software. Is a bit of a delay in the room here. So going through, just comparing the offer to the bid. It's almost a diagonal relationship. Really, the goal of the new volume and balance footprint is to automatically highlight imbalances between the volume traded at the price being offered and the volume traded at the price being bid. So this will make more sense when we get into the software, but I want to cover the basics first. So it really always compares the aggressive aggregate total price to the ask or offer. So this shows essentially the comparison. The key here being you want to see a larger percentage of one versus the other. I have the software set to default to 300%. I have it set at 400%. I know some that set it even higher. And that allows you to say, well, geez, you know, we may have, as we saw many times today, they were stepping in and lifting the offer right off the get-go this morning on the open on the S&P 500 E-mini contract. All right, so the goal of the volume imbalance footprint is to automatically highlight imbalances between the volume traded at the price being offered and volume traded at the price being bid. And I'm going to say this probably 3 or 4 times throughout this webinar, but that is critically important to understand. Okay, maybe a different way to look at it down below is just seeing that you have on the right-hand side here weak or neutral volume, hence the shading in blue, but you've had a strong bid volume, especially if it's over 300%. Software's automatic, unless you set that number higher like I do, the software will automatically code that in red, so it's showing a stronger bid volume. Whereas the opposite, which took place today, we had a stronger ask volume, lift and offers, and a weak neutral volume of sellers. Now, in all honesty, today we had, we had a lot of people short, both midterm and short-term. Short probably got a little overly short after, a really weak day yesterday and strong data coming out today. So probably a lot of them got caught off guard, and there was a lot of face rips today for the shorts, and that normally happens after big down days like last Friday. So there's always one thing to be cognizant of is the size of the difference. When I see something that is 400 or 500% difference between the sizes, this is in the aggregate. Remember, we're looking inside one bar here. That'll be an eye opener or a little bit of alert. If it's something like 10 or 12 fold difference, it really catches my eye, especially if we're coming into, like we saw today, very fast, moving into other areas of resistance, other areas of confluence that we were ripping up into this morning from not only a time but a volume-based perspective. So just some examples of what the footprint looks like. We'll run through a couple of these and I'll jump into software. The reversal, which is primarily what this is about. You can see we were kind of chopping around coming into this, had a little bit of a movement up and then a sell-off. And during the bottom of all of these, you notice the really showed a lot less than the previous bar. And not a lot by just a general measure, but it was less. That suggests selling was drying up. Now, one thing you don't see in this example is that possibly there would have been a green volume imbalance to drying up. So the lack of new selling activity as revealed was potential buying energy. So the footprint also makes it easy to spot big chunks or pockets of limit orders affecting the market either above or below. So despite significant volume coming into a move up here on the ask price, the market orders were unable to push past this level. This could be due to or equal a greater number of limit orders to sell, and that you got a little bit of a chance to see that looking at this footprint here. Subsequent up bars showed very little volume coming off, as we saw towards the end of today. Very little volume executing, with big sell side imbalances capping the tops of most of these bars today. I'll show you that live. Let's just go through some examples so you can just kind of see how the software looks. The rest of these are screenshots from my software. Okay. A little bit of background coming into the beginning of this chart here. We moved up quite a bit. This picture was taken a while ago, but this is a phenomenal example of how the footprint can really pay with the exhaustion that we saw coming into this. So moved in, chopped around for a little bit before this picture was taken. and then we came up back towards 1700. I mean, obviously it's a century mark. It's a big area of resistance. It typically is. It certainly was at the time. Came up against the top of that. Notice we had over 10-fold sell side imbalances capping the top of both of these bars. Now, that was your first hint that maybe we've exhausted. Now, are we going to, looking at these numbers and seeing what is that going to foretell what took place next? No. But you're already on high alert. Hey, maybe the freight train stopped for the day. Maybe I want to step in front of the train, which is the term I use for getting in front of a trend day. It's kind of a dangerous thing to do, but once you understand the footprint, especially if you had a big move over a period of time like today, coming into the end of the day, you can usually get a couple of pullbacks and ride them down short, or flip this chart upside down, ride them up long, just as a counter to the pattern. So you can see examples of that in a big flush. Note one thing that often is important is that at the top of a bar, and this isn't always the case, but it's another one of those, hey, maybe I have a little edge, maybe this is just a probability, is high that if you see a bar like this that has a number by a number, and if they're a little bit larger in size like this one was, this could be a potential unfinished or incomplete auction up here. Now, I personally thought it looked pretty complete, but we tried to come back up against it again, generally to this level, 2 points lower. But look at that huge sell side imbalance that showed up on the green arrow to the right. So 207 by 1544 was over a 10-folder. So when I see that just, if I'm already short, let's say I was short at 1700 if I got a lucky fill, or if I was short at some point in 1699 to the 1700, as I may have some runners still on, I want to get a lot more movement on than just the 8-point retrace that we saw in this particular example. I'm still holding those, what I call my runners, and we come up against this level again. This is exactly what I want to see to stay short with whatever remaining amount of contracts that I have. So we came up against that point, sold off down into 1690. Again, the numbers here, and it's not going to foretell or give you an example of how much of a flush we may see, but the point is just utilizing the volume and balance. All I'm trying to convey here in this teaching example is be on alert for it. It was a big area of resistance at the time, just as 44 was today on the ES on our rip up today. So here's another example of large, no imbalance up here, right? But just a whole bunch of volume just coming off at a particular point. Even though there wasn't an imbalance, you got a little bit of hints coming up into this 1683 area that maybe we've topped out and maybe we'll retrace, who knows how much. I'm looking to take a shot at a short, or maybe just wait for some sort of pullback and slingshot back up as a trend reversal, so forth. But the different colors inside here denote the strength, not only of the volume. Next example here is a lot of what we saw today. This was a rip fest that almost was the open test drive that we saw right off the open. We tested down a little bit, and then just the rips took. So when you see a lot of these, looks like almost like a skipped, that means that there's some pretty strong buying come in. You can see what it was, 1, 2, 3, 4, 6, right? 6 total in this area. Almost 10 in the entire bar. That's telling you that either news broke, or we have other time frame players stepping into the market, just blasting us off as we saw this morning. Okay, when and again, it still boils down to just understanding a lot of the patterns that we've seen repeating themselves over the last, 10 years that we've been in this sort of malaise of the Fed and all this crazy volatility in the market. But looking at this liftoff that we saw here, coming into almost every time we had big sell side imbalances capping the tops of these 4 bars right here, actually 5, and then we just moved around a little bit. Notice in these pullbacks we had the same thing capping the bottom. So this was a hint right here that yeah, there were some taking big shots to try and short this, or some limit orders certainly could be resting up their pockets of orders. But notice on the pullbacks, they were bought up viciously. And that was your clue, using the footprint to stay off any shorts, at least at this particular snapshot that we're looking at. So there's no order flow below 96. You notice the smallest was the third stab, had the least volume, and then things moved up again. Good example. I always like to show that. So the next one is just a possible exhaustion print. Whenever you see 0 by some other large number, or some other large number by 0, again, doesn't mean it's a bell ringing that it's time to get short in this example. No, but can it be a big clue as to the size or the amount of resting orders up there? Yes. And all I need is a little bit of an edge, and I see a number of these show up as is the case, and there's a potential for a pullback. Now, how much that pullback is going to be, I don't know. All right, so at this point, I'm going to jump into today, and let's take a look at today. So this, just so everybody knows, this is Market Delta's pro version of their software. This is the footprint chart of the ES S&P 500 E-mini contract. This is a DTNIQ feed that's coming in. So, and then this is a 5 P&F reversal. I think this is by far the single best way to look at order flow. You can use a 4 P&F reversal. You can use a 6. I don't know that they're going to show much difference because the numbers are still the same. It's just calculated in a different fashion. I prefer the point and figure, and it is utilized very heavily by all the experts that teach this, either a 4, 5, or 6. You can certainly set this up in a 1 minute, 3 minute, 5 minute chart, and you can look at this on a 30 minute, which is really kind of what the market profile does as far as the 30 minute snapshots or candles. But we opened up this morning, and let me just show you the bottom of this. Okay, we were moving fast. All right, so here's the open this morning. We went, and this is essentially about a 4-point range. We had opened up at the 1650 this morning, tested down to the 14 area, and then bounced. But notice every time we came back down, here's a 902 by 0, came down 70 by 0, was a lot less. Notice it was even less again here. Made another stab down under 15. And I don't know if you're noticing this, but the delta for the day, which is this calculation right here, notice it changes with each bar moving forward. That gives you the delta for the day, and then down here at the bottom you have a what's just called like a delta reversal or up-down breakdown of volume. But looking at this particular bar here, I noticed we had a pretty good sell, but then moving into the next couple of bars, we had just a real, like almost like a final blast. I mean, a very deep red color coming into the bottom of this. And I mean, no surprise. I mean, the 13 to 15 area has completely held us over the course of the last 4 days. I mean, it has been a big area to hold this market up from getting down underneath 2100, which will more than likely bring in another wave of selling as liquidations take place on that. I think the thing that was a little bit ambiguity for my, there's a lot of ambiguity in this morning, is because when we came into the 15 area, which was also right at yesterday's value area low on the RTH day session only, the volume just dried up, and then as we started moving up, we started seeing a couple of buy imbalances hit these candles at the bottom. Notice a lot of the volume, which, by the way, the yellow box is the high volume node, if you will, of each of these bars. But as we came into that, a lot of these high volume nodes were showing up near the tops of these bars. And then we had another, what I like to call skip prints, even though there was stuff executed there. Notice there's just a whole bunch of like rips. These are small buy programs that are taking place in the market. Now, the determinant of size and the magnitude of the program, I don't know the answer to that. All I know is that I'm on alert once I start to see something like this take place. Now, maybe the market was just getting its footing for the, essentially the first 20 minutes of the trade that you're seeing here. But the important thing to understand is that when I first start with your hint or your edge, the data was surprisingly good this morning. Moving into that, I probably would have been much more looking to take advantage of the shorts getting caught flat-footed here versus try and bet on a break of the 13 to 15 area, which I wasn't willing to do this morning. So let's just walk through a little bit more. I'll tell you what I'm kind of seeing here. And notice I'm not going into detail on every bar. I mean, really all you want is just hints at certain levels, hints that things may be taken off again. Notice the congestion that showed up at the 2350 area. Every time we came up right to this area, had a little bit of a sell side imbalance at the tops of both of these bars, somewhat contained us. But notice the pullbacks were small. See how the volume that was accumulated with some of these high volume node yellow boxes in here held us when we pulled back. Another clue that another leg up may be in the cards. Certainly when we started lifting, we started seeing a lot more buy side imbalances than we did sells. Matter of fact, if you look at all of these bars here, we didn't see a sell side imbalance till we even got to 27. And with this particular, so when we got to 27, notice the compact high volume going off here. We had also had started to form our first single on the market profile chart, which was unconfirmed at that point. But singles are a term used in market profile that may hint to the, especially in the beginning of the day like today, may hint to other time frame activity coming in the marketplace. So again, I was seeing the singles form to both 2350 and coming into this pocket held. So if you were someone that was hunting a short today, the signals just aren't there. At least coming into 10:14 a.m., the signals just weren't there. And unfortunately, there wasn't the best signals there for some sort of large pullback to get on anyway, right? So even though we had pulled back to 21.24, I mean, that was a weak slingshot signal at best on my software. I probably still wouldn't have taken that long at 24. So, not getting the best opportunity to get on this. Notice the tight, not that many sell side imbalances. But then again, here's another one of those lift-off type things. See how the volume kind of dried up down here. And then 34 by 0 was less than anything here with a buy side imbalance. So the fact that there's really nothing went off and the buy side hit, we will probably do a lift again. So I hope you guys are beginning to see this. If not, don't let your heart be troubled. This is one of those things that takes a lot of repetition to be able to recognize this. Honestly, there's and I've been doing this for 10 years. There's even stuff that I miss. So, and it's not important to catch every little nuance of what's going on in every little bar. Just understand that you want to glean just, the general context of what's taking place in the market today. And hopefully you're seeing that context was don't get short. Unless you're just looking for 4 ticks of a rotation back from a heavy push into a given area. I've noticed it really didn't even show itself much today. So let's continue walking through this. So again, coming up into the 32 area here right around 11 a.m. Notice we had blown past 27 yesterday's both volume, time, and price value area high, coming in singles form 2350-ish, singles 2850, and we lifted off, which was actually a ledge up around 2950 from the previous day's profile. And a couple of missing notches from the previous day too as well on Tuesday. So you knew that was a little bit of a congestion area, and I'm not even looking at the longer term profile. So just as a point of reference here, I'm going to bring in this chart because I always get a zillion questions on this, and that's okay. So here's the profile on the right hand side. Here's the long-term composite. Okay, so you can see what's taken place over the last couple of days. And we had the chip choppy for most of the summer. What I would like to call the artificial liftoff after Brexit, which is actually a great pullback opportunity for some of the fun guys to put their cash to work. And then we had the big sell-off to cap everybody coming back from vacation. If you've never seen this before, this is important from a longer-term analysis. Each of these green and red lines represent both what's called high and low volume nodes. And this is all of the volume in the aggregate. So it's very easy to see in one chart where all the activity and action has been taking place. Some of the bigger, higher peaks of this sort of sideways mountain range, if you will, is the higher volume, and the lower volume is where virtually nothing is. You can see down here the support that we have with very low volume nodes and not a lot of volume at all, because when we came post-Brexit, we had a big drop and then just ripped right through 2100 in a buy the dip type situation. So there's going to be almost a lot of air pockets, if you will, down here. Now the market profile chart on the right, and I'm not going to go into this a lot because I've certainly beaten this thing to death in previous webinars. But notice these are the singles right here with the black lines. This is the day only. This is not a Globex profile. Important stuff to recognize during the day. Other time frame players were certainly existent. To what degree, though, versus just a short squeeze, hard to tell. But the point is that we were headed up, and I don't want to be on the opposite side of that. And that's saying a lot, because I'd much rather be short than long, especially in this market. So those are the two charts. Back to this. So the footprint coming into 38. Not a lot going on, right? What can you glean from this bar? All volume took place at the top, right? You take that away. Now, as we came back up towards it against, right? This was one of the first times of the whole day. And it wasn't even the best, but we were getting some signals here. We got some sell side imbalances showing up. Volumes hitting the top. And boom, we came right up against it again. Look at that big 10-1. This was the first short I took today. And I got lucky to get filled at 36 and a quarter on this. I really wanted a better fill, but essentially, I wasn't expecting much of a pullback. just a little, almost a scalp type trade coming back against it. Pretty powerful as far as these moves up today, but almost equally, like, these numbers were big enough for me to say, hey, especially 37 was a pretty decent area against the volume and stuff, along with a single from the first day of the sell-off last Friday. It's a pretty big, important area right under 40 there for a variety of confluence-based reasons. I just want to take a shot at it. So as we came down into this area here, this was the first true slingshot to show up today. By slingshot, I mean just a pullback in a trend. It's worth taking. But I didn't get long. I probably should have. But some I know did take this trade. Paid off quite well because we ripped another 10 points, more than 10. So buy side imbalance, drying up in volume, drying up much less than the previous bars, bottom, previous two bars, and with just a movement and holding at a support level from previous high volume nodes in these previous bars. So this was your first shot at a long, whether you held it, took it, what have you. The footprint did give you some hints to get on that, and then certainly we went up, ripped right up past there, and the final peak of today, which was actually a pretty decent short. Didn't pay that much because we were so close to close. But if I just move forward here, I'll show you what took place. So here. So at the top, 0 by 666. That was probably almost a reason to take a short just because of the devil number. But 0 by 66 capped right up underneath. This was a single from the previous 2 days ago. And it was also a whole pile of other stuff at Confluence there. So definitely be hunting right here, especially after I saw the 3 6s. I'd be hunting again for this, and this showed up. So this was my second short of the day, right in here. Got filled at 43 1/4. It was a shitty fill, but it took this particular bar, and I was glad to see that it was the high volume node of the bar, but we had a nice sell-off. It's actually one of the bigger ones. It was a little quicker too, so that a little more confidence. But expect when you're looking at it this way or this type of technical analysis, you really should expect, especially with the motoring up off the gate, out of the gate, I should say, this morning. You really want to be cognizant. These pullbacks are going to be short and sweet. This isn't going to be some big grand, rejection reverse type of day. I didn't expect that, especially after we've had a fair amount of distribution taking place in the market. But we had a sell-off here. And then, really the other benefit of the footprint is that it can help you to add. Now, whether or not you would have had the gall to add back up here 15 minutes in front of the close, which from a risk management standpoint is typically not the wisest decision, but certainly enough, we came back up against all these high volume nodes that have showed themselves up at the tops of these bars, and then we had another sell-off. And that, folks, is the footprint. Anybody have any questions on anything? Let me jump over to the other side here. And also let me go to the last page here. So, couple questions I got on the course. Just go to my website, click on the educational tab, and the course is actually on sale for 20% off for the next week. These are the 7 key elements to consistent profitability. Commitment, positive, essentially your attitude. Don't fight the market, classic case of that today. Do focus on being right. Don't focus on your P&L. And then risk, be conservative, have an edge. One of the questions I got emailed today was, how comprehensive is your course? And here's what I have to say about all that. I don't make my living off of selling courses through this site. I make my living off trading and managing client wealth. So if somebody's interested in the course and they have questions on it, you can certainly email me. I'm happy to answer them. It is almost 40 hours of HD video along with 60 files, both Excel, Word, all kinds of stuff, up on my Microsoft cloud. And once you pay for it, you get an invitation to the 2 parts of the cloud. There is a mountain of stuff up there, soup to nuts. But the a lot of times when somebody will call me and say, hey, I like what you do, Steve. I want you to manage wealth for me. I want you to teach me how to trade, or whatever it is. The first thing I will always say to somebody, and maybe it should be number 8 on the elements of consistent profitability, is commitment. And I should have it probably in huge capital letters across the bottom, because the vast majority of people that fail at this, they don't have the commitment. They're not crazy like I am. They're not sort of a maniac with OCD like I am. And, I've put probably 9,600 hours into this since I started doing this 10 years ago. But, the great thing about a lot of the trading and mentor guys today, and I'm friends with 2 of them personally that are both e-mini player as well as trader, and the Winvesting guys and open trader, I get together with those guys on a regular basis. They're over in Orange County here, one's down in San Diego. They have put just ridiculous amounts of time into the market, and I mean, in some cases, both of those guys probably put way more than the 10,000 hours I'm coming up on. So I think that the number 8 is very important, in that it is just a commitment or an almost just in crazy drive to want to master this, because what other occupation out there that you can spend, I don't know, $5,000 in a decent trading system, 4 to 8 screen type trading system, and maybe another 2 or 3 grand on some course material, or and have a almost full business for less than $10,000. I mean, it's crazy. So, many of these other occupations where you can push a 7-figure income, if you're really good, you have them spend, 12 years in school and medical school and residency, and it's just, I don't know. I think it's a great opportunity if somebody's just willing to put the dedication into it. So that's it. And if you guys have any questions, you can email them to me. And take it away, Josh.